So with that, I think let's move on to the next part of our presentation with Corne in terms of when we come into wealth creation, what are the 4 steps and some strategies?
I'd like to start off by saying I'm Corné, I'm a financial planner. My business is called Prestige Portfolios. I share offices with Merton. Sorry for the South African speech impediment. I know it annoys Merton very much because he speaks perfect Aussie. When it comes to financial freedom, and we believe, and I've seen in my 23-year career that there's really only 4 steps that you need to take to get financially independent. Where's that clicker? Will you just and this is basically a summary. We all start out at ground zero with no direction, no plan, no strategy. Everyone knows that they need to do something. When cash flow starts getting nice and positive, a lot of people want to do something, but they don't know where to start, what to do. Should I be looking at property? Should I be looking at shares? Should I be paying off my mortgage? Should I put extra money in my super? And now, it's very difficult, and like Nathan said, there's too much information as well out there, so it's very difficult to get started. It's my job, and all of the experts' job, to take clients to take action, to help them to take action. I move to stage 1, where we provide a little bit of direction in terms of what your goals are. We get really clear on those. Where are you now, and where do you want to be, and what do we need to do to get there, and really take some action. Stage 2 is all about surplus cash flow, equity in your home, hungry to build wealth. I think if you don't mind, I'm going to just do these all separately. So stage 1 is in your financial journey is we need to get some proper foundations, financial foundations. And there, part of that is we look at protecting your family. That's the first thing we always look at, because you can set up the most sexy financial strategies in your life, but if that does hit you, you better hope you're dead and not disabled. So we need to take care of your family. And all these things can happen to you now, so we take care of that first. The second one is estate planning, the wills and power of attorneys and things like that that talked about. The third one in the word perfect is we need to get really smart with superannuation very quickly, and I'll get back to that a little bit later. You have to have a foundation advice team that includes your planner, your accountant, your mortgage broker. You have to have effective debt in this perfect foundations to make sure you don't give the bank what they don't need to get. Very important. You'll see in the next stage I talk about that a little bit more. We need to get your cash flow under control. That's part of the foundation. You cannot start building wealth if you're not in control of your cash flow, which is very important. And the same goes for your tax. You need to be in control of tax. And we want to, through all 4 of the stages, we want to use the banks and we want to use the ATO to pay for your wealth creation. And I'll show you how we do that a little bit later. Stage 2 is what we call pathway to wealth. This is where we've built the perfect foundations and you're ready to get serious and put your wealth creation on some steroids. This is usually where clients have a little bit of surplus cash flow, some equity in their home, and we review the foundations again with the insurances, the estate planning, some superannuation strategies. I'm so glad you included debt recycling in there, and it's probably one of the best financial strategies now. Probably the least understood one, but a lot of our clients are using that very effectively. Debt recycling just means it's a strategy where we turn your bad debt into a good debt. Bad debt is where you have debt, where you pay interest payments, and you cannot claim that for tax. Good debt is where you can claim the interest payments for tax purposes. After we've done that, we get to countdown to retirement or financial freedom, where we've created around $300,000 of assets outside your family home in the pathway to wealth stage. We have clearly defined goals for retirement. This is where we get really clear about that. What does retirement look like? What income would you need? Usually we start with these strategies about 5 to 8 years before retirement. because we need to start moving some of the assets into the correct structures for you to retire. Because you don't want to pay tax when you retire, you don't want to have debt when you retire and don't have to work anymore. So some of the strategies we look at, maximize superannuation, consider a transition to retirement. Very important, this first one here is when you have started to create assets, you don't need that much life insurance anymore. So we start reducing that. So Nitin and I, about 2 weeks ago, met a client and when Nitin asked her, do you know what a financial advisor does? She said, they run around and sell insurance. I was very upset. But it's not about insurance. You have to have the insurances when you start out, but if you don't need that, if you then pay a premium for insurance, you waste money. And the final step is when we're ready to break free and fire the boss, where we have assets outside our family home of around at least $500,000. We can choose whether or when we want to work, and our goal for retirement is now absolutely perfect. In this stage, and I want to say the final couple of steps in the previous stage, we also make sure that we plan for the expected and the unexpected in retirement, and talk about the income needs for our clients in that as well.
What is TTR strategies?
Let's go back. TTR is a transition to retirement strategy. This is when clients reach the age of 60. They can enter into the pension phase of superannuation, but still make contributions and start taking advantage of tax benefits there. Really cool strategy as well. I think this is part of your handouts. I think that you included this for you guys to tick off things that you find interesting throughout the presentation when we start talking about all these things. Later on, I'll be covering superannuation and shares and property and all that in a calculator, and you'll see how it all comes together. Was there anything else that you wanted to mention on this, Nathan?
No, I think we have some time. We can take some questions.
Yes, if you guys have questions, please.
People can pick off the self-assessment.
Yes.
Then ask any questions.
Yes, happy to take some questions if you guys are ready. Any questions? I wanted to say that also in this countdown to retirement, independence, 5 to 8 years away from that, one of the strategies that we also look at, it's not listed on here, is central pensions. Will you qualify for central pensions and how we work that into your plan? Yes.
I saw a remark there, debt elimination in one of the strategies there.
Yes.
Isn't that good? I mean, if you can invest in some other opportunities which give you more return than what debt is costing you.
Yeah.
So is debt elimination?
Debt elimination becomes important for us when you are very close to retirement. We don't want our clients to retire with debt because simply as interest rates are going up now, you'll get into a stage where you cannot earn as much from your investments as what you're paying on interest. But also, if you have assets that generate enough income, sufficient income for retirement, it's not necessary to have that debt. But I think you're talking about good debt and bad debt as well. It's never a bad thing to have a good debt. It's the bad debts that we want to get rid of, definitely. So these are the mortgages, personal loans, credit cards, things like that, where you cannot claim the interest for tax reasons. But a good debt is a good thing to have in your portfolio. Yes?
How did you arrive at this 300K and 500K values?
You'll see on the government website, MoneySmart, that they talk about what is a comfortable retirement or a less comfortable retirement or a really wealthy retirement. So those figures come from there where we look at a comfortable retirement of about, you need an income, I think the government talks about 58,000 a year. They should put you on a comfortable retirement space.
In today's cost, right?
In today's cost, yes. Yes. But I mean, that's just an indication. It doesn't mean that we're going to plan for 58,000. Some clients come in and say, look, I want to earn 80,000 and I'm in retirement, so we do it that way as well. But $300,000 in nest egg assets is outside your family home, and that's very close to retirement, about 5 years out.
So you said 58,000, government. So what is the
amount of money we should have in super when we retire to generate that 58,000 per annum?
I'll show you that a little bit later, that question is answered. I think we got a time call, Nathan, so if you have any more questions like notes, please, and we'll answer that a little bit later.